If we start off with the Australian beef footprint within the Middle East, the Middle East market for Australian beef is probably, it's not a large market, but it is a valuable market, particularly for beef. And this total volume is split between beef and veal. So we do a considerable amount of veal exports into the region. We also still do some manufacturing exports in the region. But what we have in the middle is some very good quality product at some very good pricing that goes into our food service and retail markets. Right. Sorry about that. If we look at the mix of where that volume is going, the total volume in any one year is anywhere from 28 to about 30,000 tonnes, or 32,000 tonnes, with about a 30,000 tonne average. Saudi traditionally has been our largest market for beef, and then we were fortunate a few years ago where we had some favourable access over Brazil into that market, which is now diminished. Brazil's come back into the market at a much lower price point to us, but we've been able to maintain some good volume going into Saudi, and towards the end of last year, we actually saw some really good growth in Saudi market. Saudi has been slowly opening up and being more accessible to people to get in there, and they're starting to develop a food service, a restaurant culture, a tourism culture. They're really starting to develop their tourist assets, particularly along the Red Sea. So we will continue to see growth in Saudi over the next 10 years as these projects come online. The UAE has always been a very good market for us. It is the one market within the region that does have considerable tourism. It has considerable business travel. It has a large population of high income that does rely on a lot of hotel and restaurant trade as well, and some really big retail footprint. And as you can see, this year, from January to October, the UAE is actually growing. So it's a good sign of when we come through some of the challenges we're currently in, that there is still growth in the UAE and there's good growth in Saudi. Kuwait and Qatar have been challenged. They're a lot slower to open up from COVID, so they're really just starting to come back online now. They've been strong on retail sales, but their food service has been decimated as they've had really tight lockdowns in those countries. Jordan's been an interesting country to watch in the last 12 months. It's a market where we still have considerable manufacturing meat going in there for some further processing, but we also have some really high-end, good quality product that's going into a lot of modern retail, and there's some very high-end retail that's developed in Jordan in recent years, and it's a country where they really appreciate their beef. So again, a country to watch, particularly as their economy improves and as their tourism opens back up again. One of the key drivers in Jordan and one of their main incomes is from tourism. So that's been decimated this year, but hopefully we'll see some signs of that recovering very soon. If we turn around to sheep meat, it's a very different picture than beef, whereas beef's a small export market. Sheep meat is quite large, and as you can see, up until a few years ago, it was our largest, or the Middle East and North Africa was our largest market for Australian lamb and mutton. There's been a number of factors that have influenced that and now have dropped it down to third place, one of which is supply. It is a key mutton region, and as Tim explained earlier, the supply of mutton has been challenging in recent years. So we've lost quite a lot of volume in mutton sales, particularly into Saudi Arabia and Oman, which is very supportive of Australian mutton. We also had Iran come online a few years ago as some of the sanctions from the US was lifted. Their economy showed some signs of improving. Their domestic supply was in a shortfall, so they came online and quickly grew to 1,000 tonne a month market for Australian lamb, which was all air freight carcass. With the pressure from the Trump administration and some sanctions being enforced again and their economy suffering, then that market ground to a halt probably in about March, April last year, whereas we're not shipping anything now. It became extremely difficult on money transfers. Their economy suffered around that same period, so we stopped going in there. But it has the potential again to open up in a few years if we can get some some more agreement within the region, a bit of coherence, then I'm sure that Iran is always on the radar as a market. Again, the main markets around the region are the UAE and Qatar. A lot of that is carcass trade, but in recent years, the UAE has definitely been growing in vacuum packed chilled product as well, particularly in food service, a lot of legs, a lot of racks coming in. We move on to the Australian beef and veal cuts, the MENA. As you can see the breakdown, as I said before, the manufacturing still forms a component of what we have here, and that's driven mainly by a lot of the brand owners of the QSRs that still determine that that they want Australian raw material going into their product. We've seen the development of further manufacturing in the region. We still have some big brands that do their own manufacturing within the region, particularly in Saudi, a little bit in the UAE, particularly with one of the Brazilian manufacturers now has built a facility here, but they are still also purchasing some Australian product. If you look in that graph, if you look at the carcass trade, that's not beef carcass, that's actually the veal carcass. So you can see it is a significant part of what we do in this market. It is a valuable market for that veal that is produced in Australia. And we have seen some growth in that in the last couple of years. The chart on the right is interesting, that you can see that over the last 5 years, we've seen some great growth in chilled product. Now that is a sign to me of the development of cold chain within the region. It's always been a challenge here, the cold chain and logistics side of the business. But there has been significant expenditure on infrastructure in recent years to address that and modernise that. And it is an opportunity for Australia that we do our chilled product well. We do get extended shelf life over some of our competitors. So it is a great opportunity there within the chilled sector. And we've also seen some great growth in grain fed. Again, that is the modernisation of retail to a certain point, or the stepping up of offering in retail, and the development of niche retailing. So in most of our major cities in the region now, we have one or two very boutique high-end butchers. That's a great sign that people are moving it into, or are looking for a want of some higher end product, and that means more of a marble product, a grain-fed type product, which traditionally in these markets they've always looked for a lean product. But now with the education through dining at restaurants, the education through world travel, a lot of the population in this region, in the capital cities, has been educated abroad. A lot of those in the UK, the US, and quite a lot actually in Australia. The understanding of beef and the understanding of fat content as quality and the enjoyment of eating is starting to grow. So now we're seeing the market cater to that. And the bars on the right are interesting as the frozen grass fed. And as you can see in the 2016 is the legacy of Brazil being excluded from Saudi, where we've had higher. In 2014 and 15 it was actually higher than that again. But a lot of it comes down to probably more of the availability of the grass fed into this region, and the price that we've been getting for some grass fed into other markets. So it just means that our grass fed trade into here is still strong, but it can be a little bit inconsistent. As we touched on, the Australian veal. So a lot of that veal that is exported is done as the whole carcass. So it's a very light carcass, around 25 to 30 kilos. It has its purpose within this market. We've seen some growth in the last 2 years into Saudi for that product. That's more around a replacement at a price point to mutton. So it comes in as a carcass where it can be cut up for a lot of the traditional cooking, and then where mutton has been in short supply and challenged in supply, then we have filled some of that business, although not all of it, with some of the Australian veal carcass. So global beef shipments into the region have slowed. You can see from what I've just put previously that our volumes have been okay in beef into this region. There's been some effect, but but not the greater effect of some of our competing countries. If you look at the first box there, where we look at the situation with India, they were considerably disrupted in their production and exports and supply through COVID. But the majority of that product is very much commodity product. It's very much frozen product. So although their actual exports were down, there would have been a lot of that product in freezers around the region. So there would have been an opportunity actually to reduce some of that stock. So the impact within the region was probably not as significant as what that graph shows, as they would have worked through a lot of the holding stock of what's in the freezers. And then now India's come back online, so they'll be replenishing. The next one is probably more of a concern, or not so much for us, but for our competitors, Brazil. So the average in 2020 for Brazil has dropped, and that's probably more driven from what Tim was saying earlier, is with the competition from China. We've seen a lot of South American countries switch a lot of supply into China, and Brazil has definitely increased that through 2020. So overall, throughout the region, though, the beef supply is down, but the demand is still very much there. If we move into the mix for what we do for our sheep, our lamb and mutton exports into the region, you can see, and this graph has been presented a few times, that the mix of the live sheep exports to the region from Australia, this isn't live sheep globally, this is live sheep from Australia, compared to our carcass exports, has basically leveled out, or there's been a swap in volumes. And this is a number of impacts that, yes, it's live exports does have some challenges, but it's more around the price point of live exports to get them such a distance. Our volumes have dropped, but the actual demand for live sheep in the region has not. So the actual total volume, from what we can work out through our network of insights, is that the total demand for live exports in the region is maintained. Australia's market share of that has decreased, and that's mainly due to market access, where we stopped exporting into Saudi Arabia. And it's been challenging as our prices over the last 10 years across all our sheep, across all categories, has increased, and we've become probably less competitive with the African countries. They have a much easier and closer shipping channel into Saudi. So a lot of that product we were doing into Saudi has now been replaced by East African sheep, which basically has a very short distance to travel across the Red Sea. We've also seen a number of other countries start to export live sheep. We see a number of Indian sheep come into the market, particularly into this side of the Gulf. And then throughout the Levant, we've also seen Romanian sheep and the Romanian supply channel develop over these years. But then we've got the trade-off with Australian lamb carcass, where with the increase of flights to Australia, with Emirates and Etihad and Qatar, the availability for space has been great. The price has been very competitive to air freight those carcasses until recently. With the impact of COVID, has changed a lot of that. But it's mainly around the availability, the ease of doing this business, to air freight those carcasses and have them into the market within 48 hours of slaughter in Australia is pretty amazing, really, where you can actually purchase fresh Australian lamb at a retail in Dubai with a shorter life on it than what you would by shipping southern processed lamb into Queensland. So it's amazing what's developed there and how it's developed, and it's been great to watch. But when you're faced with a situation like COVID, then some of the risk is exposed in that. If I move on to the next chart, it gives you a breakdown of really the whole sheep meat carcass trade, or sorry, the total cuts trade. So as you can see, the live still forms a component of it, and it's a good component, as Jason said earlier. It's a very important component of our trade to the Middle East. Where we're sitting at the moment, will maintain. We're at a level where the demand is matched with basically the supply of what's required for Australian live sheep into particular markets. So those markets are mainly Qatar and Kuwait, which are very, very supportive of our live sheep industry. So we've got the chilled carcass, which fills a much larger gap now, but we also have the other different categories. So you've got your frozen carcass, which is mainly your mutton, a lot of frozen bone-in mutton carcasses, but then we've also got the chilled cuts. So what we want to see, and what we are slightly seeing, and we've had slight and steady growth in, is chilled vacuum pack product, and that's where the opportunity really lies. When you start to look at the risk involved with some air freights, particularly under the COVID situation, then there is a potential for price increases. There is disruption to the supply channel, where we can actually get product on the water in vacuum pack at a much better rate and a much more reliable within something in a situation that we've been presented with. So what we really want to see is the development of that. And you can see the cuts, the mix of cuts throughout, where you've got legs still form a very large component of the trade here, and shoulders also. Racks are growing, and racks are in high demand here for food service, and often short supplied into this market as other competing markets challenge for them. But as you can see on the right, then the volume of product in Australia that's packed under vacuum has steadily increased. And I think at the moment, with the current situation, this is an opportunity to really develop this vacuum pack trade. We'll move on to what the real impact of the air freight was, and where it's at now. So you can see that once COVID hit and the grounding of flights and the cessation of travel, global travel, then there was an immediate impact. And that was slow to recover. It was again on beef, but traditionally we see a lot more beef in containers and sea freight containers coming to the region than we do on air freights. A lot of the air freights that come to the region are very high end, more expensive cuts of beef that are coming in for the hotel and restaurant trade, more your 5-star type business. It is smaller volumes, so it's more efficient, and the air freight component is a smaller percentage on that higher value product to air freight and AV. But in that initial stages of COVID, that business stopped as well, because the hotels were shut down, the restaurants were in lockdown. All the countries in the Middle East basically went into lockdown, so there wasn't a great need to export some of that beef. So there was a reduction in volume anyway. It has recovered, and we're seeing a lot of demand now through the food service as they're opening up, particularly the UAE and now more so in Saudi as it's opening up. That we're looking again to get some more air freights happening on beef. Lamb definitely was a different story. You've got all of mutton basically goes on air freights, apart from one market, which is Bahrain, which has been very much challenged on the air freight mutton that they've been putting in there, which has reduced significantly. But all the other markets, it's all the air freight that comes in is the chilled carcass. So yes, initial impacts, and we have seen recovery. Overall volumes are still slightly down, but we have seen recovery. A lot of that has been driven by the airlines that are supportive. So Qatar Airlines have been supportive of the trade, and we continue to run a lot of legs, mainly around food security. And we've seen the increase in number of flights from Etihad and Emirates, and we've seen dedicated cargo flights coming out of Abu Dhabi on Etihad, and we've seen space available. That space has come at a price though. So we have seen probably 3 times the normal air freight price, but we have been fortunate that the government has kicked in with their IFAM. So the Australian government has been supportive of the air freight trade. So they're supporting that. Probably it's around about 1/3 of the actual cost. So we're still seeing a doubling in price of air freight. Now the good news is that IFAM will be extended out into the new year, and probably most likely through the period of Ramadan. So it will support through that period of where we see some an uptick in volumes coming into the Middle East markets. So to finish off, similar to Tim, with market access and some of the technical trade barriers and where we've seen some improvements, our key one in the Middle East is shelf life. Because we're so far away, it is quite a long shipping period within the Middle East from Australia. This is where shelf life really comes into play, particularly when we're trying to get more product on water. We're looking at 35 to 45 day shipping into most markets, and in some of those markets we've been very much restricted by the shelf life of 70 days. So the UAE increased their shelf life a number of years ago. We've used that as a model on developing some submissions in partnership with the Australian government to the governments within most of the markets. And that work, I guess, has come to fruition in some of these markets with the challenges around COVID. So we were early on in the situation. Then we had the announcement from Jordan that they'd temporarily increased their shelf life, and we're continuing to work on making that a permanent extension on shelf life. We had the same with Kuwait, and they've extended it to the end of this year for beef at 120 days. But we'll bring it back to 90 in the new year. We'll continue to work with them on that as well. They have seen some challenges with the 120 days, not so much with Australian product, but some other country of origin product. And this comes back to what our systems do and how we work and what we deliver in Australia, is that we know that we can achieve this extended shelf life. So we're confident in talking to these government authorities within these countries about our systems, about our hygiene within our plants and what we can deliver. Qatar sitting on 90. They've been talking about increasing beef for several months. We just haven't seen any update from that yet. We've also had a number of challenges in Egypt, and we've actually been working up there, and we actually completed a trial in the early days of COVID and restrictions on travel. But we did a shelf life trial in Egypt with their government bodies up there, and took product out, took beef product out, both bone-in and boneless beef product out past 120 days, and we did full sensory evaluation on it, where the lab that we're working with, the government lab, found it acceptable. There is now a submission. Now it has to go to a committee for approval, and they've come back with a number of other questions around other testing and which was done, and we're continuing to work on them, and hopefully we will see some movement in Egypt. If we do, it'd be a lot of hard work over the years to actually get some improvement in shelf life in Egypt. And just recently we saw Lebanon increase their shelf life to 84 days, which is good for that market as well. It's a small market, it is a high value market though. So hopefully we can see some volume actually get on into some sea freights into Lebanon. So yeah, it's market access is important. This has been our number one priority in recent years in the Middle East markets, is increasing shelf life. It's been good to see that the COVID has provided a bit of a catalyst to some improvement there. The big one that's on the table is increasing Saudi to 90 days, from 70 days to 90 days. So that's in draft at the moment. We're hoping to see that accepted and adopted by the end of the year. So that really wraps up my presentation.